Do you have a gig income and worried about getting screwed at tax time? Let's talk about it. If you're doing Uber, DoorDash, freelancing, side hustles, here's how to make sure you're not caught off guard. So, when you're doing gig work, no one's withholding taxes from your paychecks. You get the full amount and it feels like free money. But come tax time, you owe the CRA. And if you haven't saved, you're in trouble. So, here's a step by step plan how to handle it. Step 1, set aside a percentage of every payment you receive. A good rule of thumb is save 25 to 30% of your gig income for taxes. That covers federal and provincial income tax, CPP contributions, basically everything you'll owe. If you're in a lower tax bracket, you might get away with 20%. If you're in a higher tax bracket, you might need 35 to 40%. But 25 to 30% is a safe starting point for most people. Step number 2, open a separate bank account. Don't just leave that money in your main account. You'll spend it. Open a separate savings account, call it your tax account, and transfer your set aside percentage there every time you get paid. Some people do this weekly, some do it per gig. Just make it automatic so you're not tempted to skip it. Step number 3, track your income and expenses. This is very critical. You need to know how much you're actually making and what expenses you can deduct. Your net income is what you're taxed on, not your gross. So if you made $40,000 from Uber but spent $10,000 on gas, maintenance, insurance, your taxable income is $30,000. That is a big difference. That is exactly why I built the gig work tracker. It keeps all your income expenses organized and in one place so you know exactly where you stand. It's available for $14.99 and the link is in the bio. Step 4, make installment payments if you owe a lot. If you're going to owe more than $3,000 in taxes for the year, the CRA expects you to make quarterly installment payments. And if you don't, they'll charge you interest. So if you know you're going to have a big tax bill, consider making payments throughout the year instead of just waiting until April. Step 5, don't panic if you mess up for the first year. A lot of people get hit with a surprise tax bill their first year doing gig work. If that's you, work out a payment plan with the CRA and then adjust your system for next year so it doesn't happen again. So the bottom line is set aside 25 to 30% of your every payment you receive, keep it in a separate account, track your income and expenses, and you'll be fine at tax time. If you need help setting up a system or figuring out your tax situation, link is in the bio for a consultation. Follow for more Canadian tax tips. See you in the next one.